Welcome. This is the Mills team's first real estate webinar. We're very excited, and Lord knows we all love to talk about real estate, so what a platform. I'm Katie Mills, and I'll act as the moderator today, and I'm joined by my lovely teammates. So Sue Mills, and Sarah O'Neill, and Lauren Rebecca, and Michael Adams, and our fearless leader, Alec, who is hopefully cheering us on his computer, but if his golf game went late, he might not be back yet. So we'll see how that goes. So hi, Dad. So many of you have been reaching out with amazing questions, and we'd love to hear from you. So please keep that up. But we were definitely seeing some trends. So we thought what we'd do is sort of group those into 4 different sections and discuss those with you today. We're going to be here for the next 30 minutes. If you need clarification on anything, or if you think of any other questions, please feel free to just go down to the bottom of your screen and there's a Q&A button. And if you press that, then you can type in any questions and then we can take a look at those kind of towards the end of that 30 minutes. Depending how much we talk on, of course. I'll try to keep everybody on schedule here. Some of you may or may not know that back in the middle of March, when we did have the COVID lockdown, real estate was deemed an essential service. So for the past 3 months, we really have been out there helping our clients either buy or sell it if that's what they needed to do. So while that business has been happening, it definitely hasn't been business as usual, and there have been lots of changes in the industry. So we wanted to help kind of bring you up to speed with some of those, and we will get to that. We're going to start by addressing those 4 questions though. So the first question that we're finding you're asking is, how's the market? I'm definitely going to talk about that one. The second question that you're asking about is it possible to buy and sell real estate safely during these COVID times? So we're going to talk about that. The third area revolves around what's happening with mortgages. And the fourth area that you've been asking about is sort of what do we think is going to be happening with prices in the GTA as we move forward. So we're definitely going to cover all of those things. Now we're going to start with how is the market? And Sue, I'm going to turn it over to you in just a quick sec, because I think everyone needs to understand where we were pre-COVID, what those market conditions were, to know what's happened since then. So if you could dive in for us, Sue, that would be great.
Yeah, absolutely. And thanks everybody for joining us. So right off the bat at the beginning of 2020, we found ourselves in an incredibly hot real estate market. Basically, we have a strong local economy, low unemployment rates, high levels of immigration, low interest rates, and basically very few properties for sale. So in the first 8 to 10 weeks of 2020, basically the market had gone up, prices had gone up about 8% in just 10 weeks. And it was scarily reminiscent of the first quarter of 2017, when we actually at that time saw prices go up about 25% in that first quarter. And we were actually quite worried that we might see double-digit price increases again this year, even just in the first quarter. We were really truly worried for our first-time buyers that they might just get priced out of the market. But as we all know, kind of in mid-March, when the reality of COVID, kind of hit us full force in the GTA, and the government imposed the Emergency Measures Act to keep us safe, to keep our hospitals safe. It basically had the exact same effect as what had happened at the end of first quarter 2017, when the government imposed basically the foreign buyers tax, amongst other things. So that was at that time a very deliberate attempt of the government to slow down the real estate market. And although that wasn't the government's intent this time, effectively the same thing happened. So when they asked us to stay home and stay safe, real estate volumes plummeted. People did what they were supposed to do, and volumes went way down. But the plus side of that from a real estate perspective is it really kind of put us back in balance. Instead of the market being so hot, it really brought supply and demand back into balance and kind of put us back on a price trend line of where we were much more comfortable being.
Okay, thank you, Sue. Sarah, we're going to move on to you next. And I think another thing that's hopefully going to be really helpful for people to understand is how we can be interpreting the news headlines, because there have been some very sensational ones, and I just love people to have a bit more perspective on what those mean.
Sure. So hi, everyone. It's so nice to say hello to you, even if it's virtually. Yes, the headlines are always interesting, and the media has a great way of, capturing tidbits of information and sensationalizing them to drive readership. And I think we've all seen that in spades over the last 14 weeks as we've dealt with unprecedented times here and around the world. Of course, today our focus is to talk about the real estate market, which, as Katie mentioned, is our favorite subject. And sometimes even when we read the headlines, we're a bit surprised by what they say. So many of the news tidbits that you hear are really Canadian-based statistics, and they're not specific to just the GTA. And each province does look very different. If you look at Quebec and Alberta right now, they're both having real troubles. Quebec, unfortunately, dealing with the largest number of cases of COVID-19, and Alberta with the oil crisis. We've also had some key economists talking about the future of the market, and there's been a wide array of potential scenarios with respect to the real estate market. So as an example, TD Bank has predicted that we'll see the GTA prices up by the end of 2020. Benjamin Tal, who we were lucky to have in our office meeting a few weeks ago of the CIBC, their chief economist, he feels that the GTA prices could be down approximately 5 to 10% over the next 18 months. Royal Bank of Canada shares the same view as CIBC. So when we asked about the discrepancy to Benjamin Tal, he sort of shrugged his shoulders and said, well, maybe pick the middle of both of those. So that would be like 0. And then we have CMHC, the Canadian Mortgage and Housing Corporation, who have been in the press quite a bit lately. They're predicting that nationally prices could be down, somewhere between 9 and 18% over that same time span. So hard to know, really, is what that says. But the economists are definitely building in some buffer with these predictions because there's so many factors to consider. We've got to think about unemployment, immigration, and when or if we'll see a second wave of COVID-19, which seems like a high probability. When will we get a vaccine of some type? So lots to consider. So just to give you a bit of detail, and as expected, the Canadian real estate sales volumes have decreased over the past 14 weeks. In fact, as of the May market statistics, the sales volumes are down 54%. So not home prices, which is what a lot of people sort of interpreted that to mean. We're talking about the volume of sales. So we have sales down, but so were the active listings, and they were down almost the same amount. They were down 53%. So on a positive note, this confirms that Canadians, we've done exactly what the government asked us to do. People have largely stayed home, and that has reduced the volume and activity in the real estate market. The good news is that when you have supply and demand equally going down at basically the same rate, you end up with a balanced and stable market. So standard supply and demand ratios there. And as a result, across Canada, we just saw a reduction in prices of just over 1%. The story in the GTA is similar in terms of sales volumes and new listings being down as well. However, we've seen some moderate price growth in the GTA year over year, and we're still dealing with a fairly low number of homes available for sale, and especially in some pockets within the city and different housing types. So when people ask us, how's the market? We say, well, it depends. Are you buying? Are you selling? What type of property are you considering? Is it an investment? There are a lot of factors to take into account. So today we can't go into those specifics with each of you in your various scenarios, but we're very happy to organize a separate Zoom call with you individually to talk through your specific situation.
Thanks so much, Sarah. It is so important to think when we see those headlines, are they talking about national levels or local numbers? And just that really key distinction between the volume of sales, and that doesn't necessarily mean that prices are down. So thanks so much for clarifying that. So now that we've looked at how the market was on fire before COVID, and Sarah, thanks for taking out some of the sort of panic from those crazy headlines, we really want to dive into what's happening in the GTA market now. So Lauren, if you could take over for us now and give us an overview of what we're seeing.
Yeah, for sure. Hi, everybody. It's so nice to see so many familiar, I would say faces, but names on the computer. I'm visualizing you in my mind, though. So yes, sales volumes are down dramatically, as we're all saying, in the second half of March and April. And that's everyone was respecting the mandates to stay home. Buyers weren't out there looking, and as such, sellers weren't putting their places on the market. But as a team, we definitely felt things pick up significantly in May as people realized that they could still buy and sell real estate safely. There was more buyer showings, more offers, and we brought many new listings to the market. So it wasn't a surprise to us when the stats were released last week that confirms that May's sales were 55% higher than we saw in April. And that's about 4,600 sales, which is still about half as many as we saw in May 2019. But what's been very consistent is the number of new listings coming on MLS has been down in relative proportion to the number of sales for the second half of March, April, and May. And because of this, as Sarah mentioned, supply and demand have remained generally in balance. As such, we have seen average prices holding fairly steady for the past 2.5 months. In May, we saw average GTA prices rise by a moderate 3.5% compared to May 2019. The only housing category where we saw a slight dip in prices this past month was in the detached segment. But this likely has more to do with the composition of sales, with fewer high-priced homes trading than this time last year. And although we won't know definitively until the June data is released in a few weeks, we do get some interesting information from our Broker Bay, that's a tongue twister, Broker Bay platform, which is how we as agents book and confirm showings on properties. And the data out today shows that in the first week of June compared to the first week of May last month, showings and offers registered on properties were up nearly 100% compared to this time last month. So this could be some early insight into what we can expect the June numbers to reveal.
Thanks so much, Lauren. It's exciting to see that uptick even while this is all going on. So thanks so much for that explanation. We're going to continue on with How's the Market? And what we're going to look at next, Michael, we're going to call on you, is who are the people that are out buying and selling right now, and what are we seeing there?
Yeah, absolutely. So at the beginning of the market, there were people who had bought a home prior to the state of emergency and needed to sell. We had people who had sold and needed a place to live. We also saw motivated buyers who had confidence in their jobs and their financial position that were priced out of the market, the hot market, as Sue was mentioning before COVID took place. They tried to capitalize on the less competitive market due to the pandemic. So much of the activity in the early days satisfied these needs. Since then, many of the first-time buyers have taken the opportunity to get into the market. And we're seeing a higher percentage of sales happening in condos, townhomes, and semi-detached properties. However, with this demand for the entry-level homes, particularly in the $1 million range and under, as Lauren mentioned, the inventory levels are still relatively low, which is driving competition. So far, activities in the highest percentage range, in the $2 million and over, have been lower, primarily because these moves are often discretionary, and many of our clients are taking more of a wait-and-see approach. Also, in our team's experience, we're getting a lot of inquiries from people who are looking to buy their second property, whether it's for their kids' future use or even their own, with the idea that they want to rent in the meantime. However, with immigration levels likely to be lower until COVID's over and many post-secondary schools going online for the fall semester, we're cautioning there may be some weakening demand for rental housing. So investors should be taking a long-term view in this sort of approach.
Great, thanks so much, Michael. Now that we've seen kind of how hot the market was prior to COVID, and thankfully we're seeing that through COVID, the real estate world is still turning for those who choose to be involved in it. And now that we've kind of seen what's happening out there now, let's move on to question number 2, which is it possible to buy and sell real estate safely during COVID time? So Sarah, we're going to turn to you now, and I know there's been some real pivoting in the industry, so if you could give us an overview of that, please.
Absolutely. So the quick answer is, can we sell real estate during COVID? Well, as you heard by the results, the answer is definitely yes. And in fact, our team sold 17 properties during the last 14 weeks. So to be honest, it took us a few weeks to kind of figure out how we do this safely, protecting our clients, ourselves. But we really now have locked in standard protocols in place and, things that you would expect. So we have a disclosure that is signed by anyone that's going into a property, the agents and the buyers themselves. We require people to wear masks and gloves, and we provide hand sanitizer and Lysol wipes. So certainly we've been big buyers of that type of product to have ready and accessible for our clients. Generally as well, the lights tend to be left on in the homes, and we try and keep doors, the inside doors open, so there's a limited amount of touching of surfaces. And appointments are really limited to like a half hour, and there's no duplication of appointments. So people have a set time in their own space and they leave, and it has been working very, very well. The other thing is technology has proven to be so incredibly helpful during COVID. And I mean, look at us here, like we as a team feel that we've learned so much, more than we ever thought we could learn in 14 weeks around technology. And this webinar is proof of that. I think the big question we all ask ourselves is, how did we ever exist without Zoom? It's hard to believe. But the key now is that buyers are spending a lot more time online analyzing properties before they will step out the door to go and view them. And that makes sense. They should do that. So fortunately, we've always provided a lot of information when we list a property. For those of you who have worked with us before, we always provide, great feature sheets, custom websites for each property, a lot of photography, panoramas, videos, floor plans, home inspections. So things that people are just expecting our team to provide, we still provide, as we know how important those are. But we've added a few more things to our repertoire. So as an example, we've added the 3D Matterport virtual tour, which is a 360-degree view of the property. I don't know if any of you have seen them yet, but they're really amazing. With your mouse, you can basically walk through the home and inside a room and turn around and walk back out the hallway. So the feedback on that has been really great. In addition to that, and hopefully many of you follow us on social media. If you haven't, you should. Under the Mills team, we're both on Facebook and Instagram. We're now doing virtual open houses because they are not being done in person at this point. And what we do is we personally walk through the house, videoing it and explaining the key features and benefits of the property. And the nice thing is for the buyers is they can ask us questions as we go. So that's also been very well received. The other piece of technology that we've had for a while now, but has proven to be also very important during COVID-19 protocol time and safety distancing time is electronic signature, which allows us to do all of the paperwork via electronic signatures. So you, from the comfort of your own home and the safety of your own home, you can sign all the necessary paperwork. So really, technology has been a huge factor in making this process as smooth as possible during the COVID restrictions.
Thank you, Sarah. It's certainly important to see that everyone's #1 priority is staying safe, as it should be. So thanks for explaining some of those changes. We're now on to #3 of our 4 questions, which is what's happening with mortgages. So Lauren, if you can please jump in here and give us an update into what's happening there, please.
Yeah, for sure. Happy to. So everyone likely knows interest rates are incredibly low right now. The Bank of Canada, in response to the pandemic, reduced the prime interest rate to 0.25%. And because variable mortgages closely follow the Bank of Canada's prime lending rate, we are seeing variable interest rates fall for the first time since late 2018. Right now, we're seeing many people who need to either renew their mortgage or get a new mortgage opting for variable rate mortgages. And fixed rate mortgages have also dropped because government bond yields are very low. Mortgage brokers are now advertising 1.9% 5-year fixed rates and 2.2% variable rates. So yes, very low interest rates. And the predictions are that interest rates probably won't rise until 2022. If you recall back in March when we did our market update video, we started with reporting that the Bank of Canada was going to be lowering the qualifying rate for mortgage stress tests. And this would have made mortgage qualifying easier for buyers, particularly for first-time buyers. But the brakes were put on that decision once COVID hit. Good news is they are hopefully on track to reinstate that in the coming months. And as Sarah mentioned, the Canadian Mortgage and Housing Corporation, the government-backed mortgage insurer, has been all over the headlines recently. First with their prediction that the housing market will decline 9 to 18% nationally this year. And now most recently, because they're tightening mortgage qualification rules for borrowers with less than 20% down payment as of July 1st. There's even talk now that CMHC will do away entirely with the option to purchase with a minimum of 5% down and make it a mandatory 10% down payment for any insured mortgages. So the good news in all of that is that CMHC is one of 3 mortgage insurers. The other 2 are private insurers, Genworth Financial and Canada Guarantee. And they have just announced that they won't be following in the footsteps of CMHC with the same restrictions for now. And that's obviously positive because all of the banks work with all 3 of these insurers. I think the overwhelming feeling is that these new regulations will not impact the majority of buyers in the GTA, but it's certainly raised a lot of questions.
Thank you, Lauren. We're now going to move on to the 4th and final question that we have planned, and that we know is on everybody's mind, which is what do we see happening with prices in the GTA as we move forward? So Sue, I'm going to call on you again if you can dive into this, please.
Yep, for sure. So this would be the perfect time for us to pull our Mills team crystal ball down off the shelf and tell you exactly what's going to happen in the short term. But as we've seen, even the experts are, have varying degrees on and differ sometimes on what's going to happen in the short term. But I think there's no question that over the long term we have total confidence in telling you that we're absolutely assured in the long-term value of Toronto real estate. But what we do know from history and in even what's happened right now over the last 11 weeks is that Toronto GTA real estate is incredibly resilient. We came into this in a very strong market, as I said at the outset. Mortgages across the country at the beginning of all this, 0.1% of mortgages were in default. And Bank of Canada, even at the end of this, is predicting that they think that there'll be as few as distressed mortgages, less than 1% of mortgages will be in distress. So it really, we're coming at everything from a very strong position. We're seeing very few distress sales right now. And it's really more, as Mike has talked about, kind of a change in the composition. So very active first-time buyer market right now, an active investor market. And where we were seeing kind of the higher end of the market taking more of a pause and more of a wait and see attitude, quite frankly, in the last 11 days, that's even changed. It feels like we've really turned a corner in terms of people's outlook and sentiment. I think Torontonians are just ready to kind of get back to business. But certainly, the experts feel, and our team certainly feels, that you can't go wrong kind of with long-term real estate in the GTA. Over a 40-year period, prices have averaged, they've grown 6% a year over 40 years. So, and for most people, that's 6% after tax because they're, our principal residences. So, the market was on fire pre-COVID. It has taken a pause. This wasn't an economic crisis that caused the slowdown. It was a health crisis, which obviously has huge, economic repercussions. But as Sarah mentioned, we had the good fortune of hearing Benjamin Tall speak to our brokerage, and he was saying that at the outset, unemployment rates were about 5.5%, and he expects they could go as high as 13 to 14%, kind of through the worst of the economy and COVID. But he thinks things will level back out at about 7 or 8% unemployment. So if you look at that from the reverse, it really means that 85 to 90% of Torontonians will likely be fully employed at the end of this. And just as a total aside, we can't put that on social media, the Benjamin Tall video, but it was a 50-minute interview, and we were just glued to it. So if anybody would like a copy of that, just let us know. We can send it to you individually. But certainly, just as an overall, our feet on the street tell us that Toronto, Canada is an incredible place to live. And, our own personal feeling is at the end of this, when people see how well really all 3 levels of our government have handled this, that I think Toronto is going to be an even more attractive place for people to come and live and work. our real purpose here is just to try to take any panic people might be feeling about the real estate market, out of existence for you. And our personal belief is that if you own real estate right now, please don't panic and feel you need to sell it. You may have other reasons, and everybody will, there'll be people that will buy and sell over the next 18 months or however long this takes, but don't feel you need to sell from a panic position. And conversely to that as well, if you're, if you aren't in the market yet, it might be an opportunity if you're a first-time buyer with solid, stable income and strong job prospects. Then you might consider getting in while there are some fewer buyers in the market. And investors, same thing. As long as you're taking a long-term approach that might take into account any short-term rental variances, if there's a bit more rental vacancy over the next little while. But and it also might be a good opportunity for people to move up if you're buying with a long-term perspective and solid job prospects. So someone much smarter than me once said, and I don't even know who to properly attribute this to, but when asked the question, when's the best time to buy real estate? And the answer was yesterday. And when's the next best time to buy real estate? Well, today. And when's the best time to sell real estate? And the answer was never. So that kind of summarizes our team's experience. And anyways, mostly we're hoping that we'll kind of put some minds to rest today.
Thanks so much, Sue. That's a great summary. And look at that. We've got 3 minutes left. So we have had some questions emailed into us, particularly about what we anticipate happening with rental rates, and also if we anticipate whether prices could go down from here and how likely that might be. So we want to be completely respectful of your time. We did say 30 minutes, so if you need to hop off the call, we completely understand. If you'd like to stay on for a few more minutes while we address those 2 questions, you're more than welcome to. But most of all, we're just so happy to see all of you here. We're thrilled that you joined the call. If you have any feedback for us, we'd love to hear it, or maybe you have a suggestion for a different topic we could look at. And please just always remember we're here for you anytime. So if there's anything you'd like to talk about with your specific situation, it may be about buying or selling, or maybe just getting a comfort level around what's happening out there, and we'd love to help you with any of those things. So please reach out to any one of us. I'll say a quick goodbye in case you hop off, but please feel free to stay on. And what we're going to do is talk about, Lauren, if you could jump in here to this question about what we anticipate happening with rental rates in the GTA.
Yeah, absolutely. Happy to answer that question. So we're seeing declines in condo rental volumes and rental prices kind of across the board right now. And this is the first time we've seen this in years. There are a few contributing factors to this, and several of them we've already mentioned. Job loss, and the sector most affected are those with lower wages and tend to be renters. Immigration, or the lack thereof, because our borders are closed. It tends to be immigrants who, when they first come to our city, are largely renters. And then, of course, the post-secondary education that's really moving to kind of an online platform for the fall, so we'll see fewer students renting. Another big piece, though, is the Airbnb factor, and this actually has little to do with COVID-19. Pre-COVID, the city enacted new regulations that you could only offer your property for lease on short-term rental sites such as Airbnb if it was your primary residence. Now we're seeing many of these investor-owned condos coming into the long-term rental pool. And on top of all of that, this year we're seeing the most condo completions finishing than we've ever seen in one single year. And the majority of these suites are also investor-owned and will probably be coming up for lease. So it's unfortunate timing with all of that sort of compounding, but it's decreasing demand and it's increasing supply. And unlike the resale market, we're seeing those two things moving in opposite directions. We've already seen lease volumes down significantly and the number of new listings increasing. And so for all the reasons that we mentioned, we'll likely continue to see that downward pressure continue. I think it's possible we'll see rental rates down 5 to 10% this year. The good news for investors is this is likely a short-term blip. Vacancy rates have a really high correlation with the unemployment rate. And as the economy stabilizes, we'll probably see low vacancy rates reemerge. And it's also encouraging that the data is showing the CERB government payments have largely been offsetting the lost wages and allowing those with temporary layoffs to continue paying their rent. This has resulted in low percentage of tenants defaulting on their rent payments in these first few months. So we will work through this. For investors, it's not the best news that rents will soften this year, but it comes after such a big run up in rents over the last few years. And it does feel that this will only last for the short term.
Thank you, Lauren. Sarah, we've got one last question that I'm going to point your way. And some people have been asking whether we think prices will go down further. What's sort of the chance of that? So if you could maybe address that for me, please.
Oh, great. A very easy question to answer. I wish it was. And I think as Sue already alluded to, it's that crystal ball again. I need to really shine that up and see if I can figure this out myself. However, I mean, it's the question we're all asking, and as a team, we talk about it regularly. There's just so many factors to take into account, and I'm going to sort of replicate a bit of what I said earlier. It's really going to depend on supply and demand. That's really how the market works. You know, right now, as I said, in the GTA, we have a fairly low number of properties for sale. And as we've heard, buyers are definitely back in the market. We talked about that uptick in terms of activity levels, offers, that type of thing, dramatically up in the last few weeks. But if we start to see a real increase in the volume of properties for sale and the buyers have more choices, that will definitely create some downward pressure on price. It is also going to really depend on how long it takes to have COVID resolved. Will there be a second wave? It sounds like there clearly will be. When will we have a vaccine in place? So there's a lot of things that factor into will prices be affected, and it is related to the recovery. So when we talk about the recovery, again, we've been listening to so many you know, industry pundits, the economists, trying to really gauge this ourselves. And what we've heard really is that some are predicting sort of this V-shaped recovery where, you know, we've had our big drop down and we're going to quickly recover, and that maybe by the end of the year, early into next year, we'll see the economy back pre-COVID, but that seems fairly unlikely at this point. A U-shaped economy or recovery is really what most economists are feeling is most likely. So, you know, we've had a big drop. You know, we're starting to open up and we're starting to see some initial recovery. And then they're predicting that we'll have, you know, incremental growth. And by late 2021, early 2022, be back into sort of more normalized market. The only other type of possible recovery is what they're calling, you know, a W-shaped recovery or a zigzag recovery, where we start to open up, which we've already done, and then you know, we have a higher case count come back, and the restrictive measures have to be put in place again. If that happens, definitely we're going to have a longer recovery period. So the truth is, I mean, I think when we talk about long-term and prices, you know, it's really only been 14 weeks, although I know for most of us, it seems like a lot longer than that, but not enough data to know exactly how quickly we will recover and what exactly the prices will look like. But so time will tell. I mean, that's, I guess, all we can really say. I think the positive thing we can take out of all of this, though, is that we can still sell homes during, you know, like an unprecedented time in our lives. Homes have still been selling. And we know from statistical data over the 40 years of the GTA that we've had ups and downs all along that way, but the market has always rebounded.
Thanks, Sarah. And that's really, I think, what we're all taking away from today is it really is in the midst of a global pandemic, it is a pretty positive message here in the GTA and given our real estate market. And as Sue, I think, mentioned, you know, it has been incredibly resilient and still continues to be. So we hope we've given you some good information today. We hope we've maybe put some fears to rest, and please just know we're always here for you. If you have anything you'd like to talk to us about, please just reach out. We'd love to hear from you. Thank you for joining us today, and we hope to see you soon. Be well and take good care.
Thank you.
Bye.
Bye.
Bye.